Welcome everyone to Business Duo.
I'm Daniel.
And I'm Maya.
Imagine this, a country with just 2% of the world's population, but it somehow has the potential to disrupt, well, pretty much the entire global economy. So today, we're doing a deep dive into what's happening with Japan's economy right now and why it really matters to you.
Recent signs aren't great. We've seen their economy actually shrink in the first quarter, and big sectors like the auto industry, they're putting out disappointing numbers, warning things could get worse.
Right. And it's even hitting basics. Price of rice is way up, hurting regular people, hurting shops. Now, I know what you might be thinking. Japan, that's like thousands of miles away. Why should I care? But stick with us, because these headwinds Japan's facing, they could ripple outwards in some pretty big ways. We're talking potential impacts on interest rates, maybe your investment portfolio, maybe even helping nudge the world towards a recession.
And that's because, well, the global financial system is just so interconnected. Japan's not off in its own little world. It's a huge global creditor. They hold over $1 trillion in U.S. government debt alone.
$1 trillion? Wow.
Yeah, they decide to do with their investments. It directly influences things like U.S. interest rates. For decades, really, they've been this bedrock. So understanding the trouble they're in now, it's kind of key to seeing what might be coming next globally.
Okay, let's unpack that. A key piece of this puzzle, this link between Japan and everyone else, is something called the yen carry trade. Does that sound right?
That's exactly it.
We actually got a little preview of what happens when that unwinds back in 2024.
Remember that?
Yes, of course. The yen suddenly spiked. Japanese stocks took a nosedive. And it didn't stop there. It hit U.S. stocks. Even Bitcoin felt it. And that unwinding, it's still happening now? In 5?
We're seeing Japanese government bonds, usually super stable. They're losing value. Long-term interest rates are ticking up.
And when the government tries to sell new bonds?
Well, let's just say the buyers aren't exactly lining up, which is worrying. This slow unraveling involves potentially trillions of dollars in global financial bets. So, yeah, and we're definitely getting edgy.
So zooming out a bit, is this maybe hinting at something bigger, like the end of this long run of super cheap money we've had?
It could be. Some analysts, like Lynn Alden, have pointed this out. When you have massive debt, like Japan does, and these demographic pressures we'll get into, sometimes the path of least resistance is, well, currency devaluation, making your money worthless. And when that happens, historically, money starts looking for scarce things. It can't just be printed. Decentralized assets adds a whole new dimension, doesn't it?
It really does. Okay, before we dive deeper into the finance stuff, let's set the stage. Demographics sounds a bit dry, maybe, but it's fundamental to any economy, right?
Absolutely fundamental. It's about the age structure. Who's working, who's spending, who's retiring. Yeah, need a balance.
And Japan. Well, Japan's balance is pretty skewed.
It's the oldest country in the world. About 30%, nearly a third of the population, is over 65. And the birth rate, it's been way below replacement for ages. Yeah, population has actually been shrinking since, 2008?
Shrinking? Any idea by how much?
Projections show they could lose maybe 20 million people by 2050.
20 million? That's like the entire Florida just vanishing.
Exactly. It's a huge demographic challenge. And honestly, it's kind of a preview of what other aging countries might face down the road. It fundamentally changes growth, welfare, costs, everything.
Wow. Okay, so fewer people means a smaller workforce, naturally, which means slower growth, less tax money coming in for the government.
Right? But at the same time,
you've got this growing number of older people needing more healthcare, more retirement support. That's a tough equation.
It's incredibly tough. And those demographics, they have direct economic consequences. Fewer workers, rising social costs. It means the government has had to borrow a lot.
which explains that crazy debt number.
Precisely. It's why Japan's debt to GDP ratio is the highest in the developed world, over 260% now and still climbing. For years, they kind of managed it because interest rates were basically zero, and the Bank of Japan, their central bank, just bought up tons of their own bonds. Printed money to do it, essentially.
Okay, so that brings back to Japan, being this huge global financial force. You said biggest creditor nation, over $3 trillion in net foreign assets.
That's right. And the big one for us, many listeners, is that they're the top foreign holder of U.S. Treasury bonds, over $1 trillion worth as of 2025.
So their decisions really can move the needle on U.S. interest rates.
Absolutely. And it's not just government bonds. Japanese money is heavily invested in U.S. stocks, corporate debt, real estate, you name it.
So for decades, this flow of Japanese money has helped keep things stable, helped fund deficits, prop up prices, keep rates low.
In essence, yes. Helped finance deficits, supported asset prices, kept borrowing costs lower than they might have been, not just in the U.S., but globally. And the main engine behind that, those rock bottom, near zero Japanese interest rates. It created the perfect setup for the yen carry trade we mentioned.
The carry trade? If you could explain it a bit more.
Okay, sure. Imagine you can Japanese yen for practically nothing, like almost zero interest.
Okay, money.
Very cheap money. Then you take that yen, swap it for US dollars or euros, where interest rates are much higher, and you invest that money overseas. US stocks, maybe bonds in emerging markets, crypto, whatever, offers a better return than zero.
I see. So the difference?
The difference between the pay on the yen loan and the, say, 5% you earned on treasuries back in 2023, that's basically free profit.
Maybe not anymore, but profit sounds nice.
It does. And when you scale that up, we're talking hundreds of billions, maybe trillions of dollars globally doing this. It was like this giant financial loophole.
Yeah. But loopholes tend to close, don't they? That free profit can't last forever.
Exactly right. Which leads us to the unwinding we keep talking about. What happens when the conditions change?
Right. What causes it to unravel?
Well, the trade relies on two key things: those super low Japanese interest rates and a yen that doesn't suddenly get strong. If either of those shifts, the trade gets less profitable, maybe even turns into a loss.
And that's what happened in 2024.
Pretty much. The Bank of Japan actually raised interest rates, first time in ages. And the yen, it shot up over 10% in just a few weeks.
Ouch. So what were the results?
Pretty immediate. Japanese markets took a hit, US stocks sold off, Bitcoin dropped, and you had big banks like JP Morgan saying, hey, this unwinding is probably just getting started.
And fast forward to now 2025. You're saying the pressure's still on.
It seems so. The Bank of Japan is still gently tightening policy. Those government bond yields in Japan are climbing. The yen is strengthening. All of that puts those, trillions of dollars in carry trades at risk.
Trillions at significant, as an understatement. When you say leverage here, what's the risk for just an average person or investor?
It means a huge chunk of global investment was funded with borrowed yen, cheaply borrowed yen. As Japanese rates rise and the yen gets stronger, paying back those loans gets more expensive. And converting foreign investments back into yen yields less yen.
So people are forced to sell?
It can force selling, yes, selling assets to yen loans. And that selling pressure can spread, causing broader market dips. And now, for the first time in decades, people are seriously talking about Japan, not just stopping its buying of US treasuries,
but actually selling them.
But maybe even starting to sell some of that massive pile they hold. That would be a big deal.
Okay, yeah. Which connects to Japan's own bond market. You mentioned yields jumping in May 2025, 30-year over 3%, 40-year hitting a record 3.6% for bonds that everyone thought were like the safest thing ever. That's a major shift, isn't it?
It's a huge psychological shift. These Japanese government bonds, JGBs, they were seen as utterly stable. The fact that investors are now demanding much higher interest to hold them, it signals a fading confidence, fading trust in Japan's to handle its massive debt load. That 260% plus debt to GDP figure.
And the Bank of Japan used to just buy them up, right? Kept the yields low, artificially.
Exactly. They printed yen and bought enormous amounts. At one point, they owned over half the entire market.
Half them.
Now they're trying to stack, reduce those purchases, and the market is starting to test the waters. What are these bonds really worth without the central bank constantly buying?
And the answer seems to be less than before, hence the failed auctions you mentioned. What does a failed auction actually mean, in simple terms?
It means the government tried to borrow money by selling new bonds, but there weren't enough buyers willing to lend at the interest rate offered. Simple as that.
Not enough demand.
Not enough demand. Buyers, they have to offer a higher interest rate next time, which makes borrowing more expensive for the government. It shows investors are getting nervous about lending to Japan long-term, given the debt and these rising yields in Japan. They make borrowing yen to invest elsewhere even less attractive, feeding back into that carry trade unwind.
Okay, so bond market pressure, carry unwinding, right. It's all linked. But how does this spill over into weirder places? You brought up Metaplanet, that Japanese company holding Bitcoin. Its stock surged. How does that fit in?
Yeah, that's a fascinating little side story, but maybe indicative of a bigger sentiment shift. What you're seeing is some investors may be seeing the cracks in the traditional bond market, starting to look at alternatives. Bitcoin is a potential hedge, maybe.
A hedge against problems.
Potentially. Metaplanet's stock jump, it even caused a short squeeze.
Right? Where people betting against it had to buy back fast.
Exactly. Pushing the price even higher. It suggests some people are losing faith in the government's ability to manage its debt. As Japanese rates rise and the yen gets stronger, bets against things like Bitcoin or companies holding it suddenly look very risky.
So it's like an escape valve. People indirectly moving money into Bitcoin because the traditional system looks shaky.
That's one interpretation. Yeah, a move away from centrally assets towards things that are finite, decentralized, maybe less vulnerable to government policy shifts or devaluation. It just shows how quickly sentiment can shift when even supposedly rock-solid assets from a major economy start to wobble.
Okay, let's bring it back home. What are the direct consequences of all this for the U.S., for the global where it really hits our listeners?
Well, the big one is U.S. Treasuries. If Japan slows its buying, or, worse, starts selling, yeah, that means potentially higher borrowing in the U.S. for everybody. Think higher mortgage rates, higher car loan rates, higher costs for businesses to borrow and invest.
So our interest rates could go up, not because of our inflation, but because a major buyer of our debt steps back.
That's a distinct possibility. Fewer buyers means you have to offer higher rates to attract the ones that are left. It puts pressure on the Federal Reserve, too. Remember, Japan's former finance minister even, sort of, floated the idea once of using their treasury holdings as a bargaining chip in trade talks. Now, they walked that back quickly, but...
Still, the fact it was even mentioned gets your attention. It really sounds like the Bank of Japan is caught between a rock and a hard place.
They really are. If they raise interest rates too much to support the yen or fight inflation, they risk blowing up the government's budget because of the interest payments on that massive debt. Just, say, 1% rise in rates could add an amount potentially larger than their entire defense budget to their annual interest costs. It's staggering.
But if they keep rates too low,
then the yen likely keeps weakening, making imports more expensive, hitting the cost of living for ordinary Japanese people, food, energy.
And didn't you say they already own over half their bond market? Is there a limit to how much control they have?
Well, those failed auctions suggest there is. Even owning half the market doesn't guarantee you can dictate prices forever if investor confidence erodes. It really boils down to a fundamental question, not just for Japan, but globally. How much longer can this whole system of, ultra cheap money actually...
Feels like we could be near some kind of inflection point. You said Japan's situation connects to broader global trends.
Absolutely. Japan's problems aren't happening in isolation. Look around. Rising government debt is a global phenomenon. Inflation is sticky, maybe even creeping up again in places. Seeing Bitcoin hit new all this. Maybe it's just a growing unease, a feeling that the current debt-fueled system isn't sustainable long-term.
So Japan, with its aging population and huge debt, is maybe just further down the path.
It could be. Kind of the canary in the issues that other indebted nations, maybe even the US eventually, could face.
So if you can't really grow your way out of debt this big, what are the options?
Well, the options aren't great, politically speaking. Growing the economy fast enough is incredibly hard. Raising taxes significantly. Deep spending cuts. Politicians usually hate those.
And defaulting on your debt is obviously a last resort.
The absolute last resort, which leaves it leaves the option of plating it away. Currency devaluation, making the debt worth less in real terms by making the money itself worth less. Which brings us back to what Lynn Alden was saying.
And in that kind of world,
In that are finite, decentralized, outside the control of central banks. Things like Bitcoin, they start to look potentially more attractive as a store of value.
Okay, so let's try and wrap this. The key takeaway here seems to be that Japan's economy, because of demographics and decades of low rates, is now facing some serious challenges. And because they're such a big global player, especially through this yen carry trade unwinding and their treasury holdings, the risks are spilling outwards.
Exactly. This isn't just some far-off economic story. It has real potential to affect you, the listener, through interest rates you pay, the performance of your investments, the general health of the global economy. It's all connected.
So, when you look at the scale of the challenges facing Japan and maybe other major economies down the line, it does make you wonder, doesn't it? What are the long-term implications for how global finance even works? And if the old system is under stress, where does value actually end up settling in this changing world? Definitely some food for thought there.
And hey, if you found this breakdown useful, do us a favor. Like, subscribe, and share. It helps algorithm help you and others find this kind of content.